Good morning, May 15th, 2026. Here's what's happening right now. Oil is spiking 3% on the day, gold is plunging more than 2.5%, and stock futures are under broad pressure across the board. That combination is important because it tells you the market is pricing higher rates and slower growth at the same time. Treasury yields just hit a 12-month high. Oil is approaching $100 a barrel. And gold, which usually rallies on war risk, is actually selling off. In the next few minutes, I'll show you exactly what changed overnight, where every major market is trading right now, and the three technical setups I'm watching into the open. Here's the main story. Overnight, President Trump said he is losing patience with Iran, and CNBC reported he will make a decision in the coming days on sanctioning Chinese companies that buy Iranian oil. Reuters carried the direct quote earlier this morning. The oil market reacted immediately. Look at crude here. Price is pushing higher hard, now around $99.83 a barrel, up 3% on the session. What you're seeing on the chart is a rising channel that's been building for weeks, and crude is now pressing the upper rail with conviction. The structure to name here is a textbook breakaway gap on the overnight session. Price gapped out of the prior range on heavy volume. In Edwards and Magee terms, breakaway gaps mark the beginning of a new move and typically do not get filled. The operative level is $100. A decisive close above on volume is a highly reliable breakout signal, with a measured move from the channel projecting toward the 105 zone. If we probe 100 and reject back into the channel, that's a bull trap. Low reliability, watch for whipsaws. Here's what makes today different. Iran's foreign minister said overnight that negotiations are suffering from a lack of trust in the Americans, per ForexLive. Brent is now over $109 a barrel. The German Economy Ministry warned Reuters that the war will hit second quarter growth. So the geopolitical pressure is real and rising. But now, look at gold. And this is the surprise. Instead of rallying into war risk, gold is plunging. 45.60 an ounce down 2.5% on the day. On the chart, you can see a clean double top forming near 46.85, two equal peaks with a sharp rejection between them. Double tops only confirm when price breaks the reaction low. Here that level is 4,500. If gold loses 4,500 on volume, that's a moderately reliable reversal. The measured move projects toward 4,300. Why is gold falling with war risk on the table? Because the 2-year and 10-year Treasury yields just hit a 12-month high, per CoinDesk. Higher rates make non-yielding gold less attractive. My read, the market is telling you this is a rate story first and a war story second. When you see oil ripping and gold falling and yields rising at the same time, that's the textbook stagflation print. Now here's where the market is trading right now. S&P futures, 74.54, rolling over, down nearly a full percent on the session. The chart shows lower highs since early May, a developing descending pattern. The operative level is 7,400, moderately reliable support there. Nasdaq futures, 29,291, breaking lower, down 1.3%, the weakest of the four. Below 29,000 confirms the trendline break, moderately reliable downside. Dow futures, 49,842, fading 2 but holding better, down 0.6, the strongest of the index futures today. Russell, 2839, giving it back, down 1%. Small caps still tied to the rate story. Gold, 45.60, plunging 2.5, sitting right on the double top neckline I just walked you through. Bitcoin, 80,600, pulling back from 81, still stuck below the 200-day average per CoinDesk. Low reliability for a near-term breakout. Ethereum, 2256, down 1.1%, following Bitcoin lower. Dollar index, 99.16, grinding higher, up 0.3, confirming the rate's bid. And crude oil, 99.83, still ripping higher. So overall, pressure on stocks, pressure on gold and crypto, and strength in oil and the dollar. Key number into the open. Watch S&P futures at 7,400. 3 setups I'm watching today. First, the S&P. Look at this chart. What we have here is a developing descending triangle going back to the early May peaks. Flat support at 7,400, lower highs overhead. Descending triangles carry a bearish bias. The market usually breaks the flat support rather than the falling resistance. A decisive close below 7,400 on volume is a moderately reliable breakdown. The measured move targets the 7,300 zone as the next support shelf. If we hold 7,400 and bounce, the pattern is still intact but weakening. What I'm really watching is whether the bounce comes on volume or fades. That tells you if dip buyers are still showing up under this market. Second, crude oil. Oil is still in the rising channel I showed you earlier, and now we have a breakaway gap on top of it. The level that matters is $100. That's the pivot for the whole tape today. A decisive close above 100 on volume activates the full channel breakout. Highly reliable signal in Edwards and McGee terms with a measured move toward 105. A probe and reject closes the gap and puts us right back in the channel. That's a bull trap. Low reliability for continuation there. The reason this one matters for stocks: every dollar of oil above 100 is another dollar of inflation pressure, and inflation is what's pushing yields to 12-month highs. If oil breaks 100 clean, the rates trade gets stronger and the equity pressure gets worse. Third, the gold miners, GDX. GDX printed a bear flag over the last 2 sessions, a sharp drop, followed by a tight counter-trend consolidation. By Edwards and McGee's half-mast rule, a break below the flag projects another leg down equal to the flagpole. Operative level is the flag's lower rail near 48 a share. A clean break below on volume is a moderately reliable continuation breakdown. The measured move targets the 44 handle. If GDX holds and gold spot defends 4,500, the flag fails and miners get a relief bounce. Why this one matters? The miners are the leverage trade on the gold thesis. If GDX breaks down while spot gold breaks 4,500, that's the full rates not fear trade playing out across both legs. So here's the takeaway. Oil is ripping, gold is plunging, and stocks are under pressure. That combination is the market pricing higher rates and slower growth at the same time. Today's action will tell us if oil breaks 100 and if gold loses 4,500. See you all tomorrow at the same time. This is not financial advice, for education purposes only.